guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure. Welcome everyone. Thank you guys for joining. Let me just hit the record and let's get started here. Okay, thanks everyone for joining. Welcome guys. My name is Ron. My partner is Dave. It is Stocks Never Trading. We've been out of commission for a little bit because we've been renovating, doing a lot of renovations here in the studio over here, making soundproof and working 10 hours a day, and trading. So guys, let's have a fun late night Tokyo session. We'll go for about 90 minutes to 2 hours. We'll see how the markets are moving. We'll take a look at gold and maybe US 30, but we'll get into gold. We'll do a full top-down analysis and bring it down to lower time frames, and then also talking about all the news and things like that that's going on. Okay, so let's get into it, guys. Let's first start off with like Forex Factory, the news that happened today. So we had a rather light day in the markets. But there was at 10 a.m. Fed Chair Powell testifying. So anytime Powell is speaking, it's really important that we do listen and he can move the markets and things like that. Okay. So pay attention to that. We don't have any news except for nothing late tonight. Like if there was any news coming out of Tokyo, New Zealand, Sydney, going into Europe, into the London sessions, we would see any news here on a Wednesday night. We don't have much, okay? Just going into tomorrow, there is news prior to the London market open. And then when we get into the North American session over here, at 7 a.m. tomorrow morning, the British Bank of England Governor Bailey speaks. If you're trading anything to do with the pound, that currency, make sure you are aware of this. It is a red folder. And then we move into 8:30 Thursday morning. These are our weekly unemployment claims in the United States. So we'll see what's going on there. And also this red folder, final GDP. High impact. So if you're trading gold this time of the morning, remember 8:20 a.m. Eastern is your commodities exchange open. And then 10 minutes later, you do have quite a few US red folders. So there will be volatility, so just please trade careful with proper risk management. And then as we move into the rest of the day, we're moving into Wall Street over here. Coming out of Wall Street, we have U.S. pending home sales. And then we go into the afternoon. I'll be coming in for a post-New York session tomorrow, just after 11 a.m. Eastern, and we'll cover this session right over here, okay? Discord, guys, we sent out a few signals today. We had a gold sell right here, right off 3,335 when it came back to this resistance point where that big candle got rejected. It was a beautiful setup and dropped for a nice move right there. So we'll see if we get any signals on this session, and we'll take a look at them, okay? And then, guys, everyone on YouTube, thank you guys for joining. I appreciate your guys' patience when we were setting up the rooms and things like that. And you guys have a free Telegram channel pinned at the top of the channel. If you guys like, join it. And if you want to join the community, you're more than welcome. So this was this morning with Dave over here. This big move where it kind of perfectly double top and sold right off, okay? So the free Telegram channel is linked. And if you want to join us at Stocks Never Trading, you're welcome to join us. Here's the website. And we also have a free blog available for everybody. We'll get more blogs coming very, very soon. Okay, so let's get into the charts, guys. And we're going to get started with gold, okay? So gold is moving rather erratic lately as of everything going on around the world, all of the news, especially in the Middle East. There's a lot coming out in the Middle East, and that's why gold is moving, okay? And also crude oil. All securities are moving, but in particular, these ones are affected by war, okay? So what we're going to look at is how everything is moving on the daily, okay? So this is the daily time frame. Each individual candlestick is an entire day of trading. So we get to see more of a larger picture. So you can see from over here, starting in December, kind of market bottomed out at 2,500, and then we started to move into the new year, January, and you can start to see how bullish it was at the start of 2025. Until mid-February going into March, there was a slight little dip, but it was a healthy pullback, and it continued with a nice little higher low double bottom, and you got a nice big body candle right here on March 13 that closed. And if you're targeting that 50% that we always talk about, and you set yourself up with some alerts going into the future, like right in there, if you caught that middle and you extended it into the future, when you had this future pullback come right in there, you could have had pending orders waiting and with minimal to zero drawdown, and you're part of that big move. So you just gotta trade where the smart money is trading, guys. Do you guys understand that? Trading takes patience, okay? It takes time for setups to develop. You can't always expect, like when we're trading this session, we're going to try our best to look for trades, but if there's no setup, there's no setup. You know, there might be a better setup when London market opens up. And if there's no setup in London, there's no setup in London. We might have to wait into going into pre-New York and also New York. But there's always going to be quality setups throughout the day. It's just that you guys have to be patient to allow them to develop. You know, that's how successful traders continue to do this on a daily basis with consistency and high, because they're looking for those high probable setups and they're waiting patiently for the trade to come to them. They're not forcing trades. Okay, so you guys got to start to learn that. You know, it takes time. I understand. It took me many years to learn that myself. But when it clicked in, that's when everything started to change for me. So I hope that you guys are working on that skill and you guys are getting better at it, and it will really help improve everything, guys. Okay, so it's already happened in the past, but that's how we kind of get ready to predict the future moves. Okay, so since then you see it continued to move up. April, everything we had Donald Trump now in the markets and talking and everything that's going on. So we had an all-time high at 3,500, which you guys all know about. So there's our all-time high on gold. It was at 3,500, and the exact date was Tuesday, April 22, had an all-time high. And since then, the pullback where the recent low from the all-time high was right here. It was on May 15th, 3,122. So we can mark our range from the all-time high and then to the latest pullback. And then if we see where we're trading at right now, you can see we're still kind of consolidating in the middle of these orange lines. So definitely gold can continue to break some highs and maybe attempt that all-time high. But when we look since the all-time high, they have this area already kind of developed in the market right here. This is where you see this is where the one top from the all-time high, and then we came into the second top and they rejected it. And then the next day right here, May 8, the buyers bought right into there, and you can see the clear rejection. You can see it, how they rejected it out of there, and we pushed down. So if we extend this zone into the future, you can see that this red block is still above us. Okay, so if gold gets back up here, whether it's this week or next week or the week after, we have to assume that this is a red zone. Red zone meaning there's sellers there, also known as resistance, also known as supply. So that's what the red zone is representing. So if it comes up there, it's got a high probability it might get rejected and move back down, just like it did right here on the first attempt. When it came back in, you can see it got rejected, it closed below, and also the retest the following day where it came in there, rejected, and they pushed it down. And it slowly made its way back in here where it did close very positive on June 13, and then over the weekend when Friday closed, Monday opened, they bearish engulfed it right back down and continued. This is where we're moving since then. So we're on this leg coming down where it's making these lower lows and lower highs and a new lower low. And look at where we're trading, right into about 50% of this body candle. I'm going to get more into that. Okay, so when we identify a red zone, get in the habit, guys, if you can, just stretch it into the future. How far you want to stretch it, that's up to you. It doesn't hurt to stretch it as far as you want to go, okay? So are we all good on that, everyone on Zoom? Just me explaining that red box. I know it's probably redundant. We do it every single day here, but I want to make sure that you guys are all good with that. And once you understand this concept, then you'll understand the opposite concept when we look for where the support zone, aka demand zone, aka where the buyers are. Okay, so this is how we're going to identify this, and then we're going to start moving into more concepts as we go along. Okay, so that's just very simple how to identify a zone where the sellers are located. Okay, and also, guys, welcome everyone on Zoom. Sorry, guys, Conrad again. Good evening, Vareen. Thank you again for joining. Akimi, welcome. Mosharaf, welcome. Thank you for joining. Welcome. Brandon, Forex Borex, thank you for joining. Man, you don't sleep like me. You're exactly like me, Brandon. We don't sleep because I know where you are. It's pretty late. So, but thanks for joining. I appreciate you and appreciate everything you do for the team. Welcome, Samuel. Thank you for joining. And Vareen, let's get into this. Okay, and guys on YouTube, I appreciate you guys as well. Thank you guys for joining. Welcome, welcome, Ilyas Hub. Jib Smith, welcome. Hugo, thank you for joining. Tony Gold, thank you for joining. Habibi, welcome. I hope all is good with you, brother. Yan, welcome. I never sleep. You got it. You're going to see more sessions, pop-up sessions throughout the days. As soon as I get this room all renovated, then you'll see me. Once it's more soundproofed, I'm just waiting on a door, then I can really do my thing in here with you guys. So welcome. Gohil, welcome. Jenny, welcome. Alex, welcome, brother. Thank you for joining. Okay, guys, so let's get into this. So now that we've identified this, now when sellers are selling, we got to find an area of support. So how do we find that? We found it right over here. When we had this 3 days of this bullish rally, right there, when a flag can turn into a zone. So when you identify a flag or a consolidation zone where the volume is just in a range or trading sideways, that's where you can develop where to place a zone in the market. So it all started right here. We identified this here at SST from mid-April, and we've been using this block ever since. Okay, so all you had to do was, when we identified it, was again stretch it into the future. And then from that all-time high where it sold off, you see how that leg pushed right down. And where did it push right into? Right into that flag. And what are the results? What was the reaction when it came out of there? You see the wick, and then it closed right above it. We had an inside spin top day, and then we had a very nice ignited bullish candle coming out of there and engulfing all of that. So see how strong that zone was when it came in there. It took about 2 weeks to come in, but if you patiently waited for a nice swing setup, that was an A+ setup in my opinion, right there. And then if you continue to stretch this into the future, then you see where the sellers broke that zone. They officially closed it below on May 14, and the next day opened bearish ignited where we pushed down, and that's where I have that low marked down there. And since then, we've been making higher lows off of here. And then the buyers brought it right back up, and then you see the consolidation, a bearish day, a bullish day, a bearish day, a bullish day, and then we came back in there, and then look at the bullish candle close above. So we can stretch this zone again into the future to kind of resemble the red zone above us. So now we've done our job. You know what I mean? We've already identified 2 solid zones, 2 blocks in the market, and one is representing where the sellers could be, another one is representing where the buyers could be. Now, these can be broken. These can flip very easily. If like the buyers come up here and it's not rejected back down, then the buyers probably have more momentum and are looking to break this zone. They're looking to break for a new high, not an all-time high, but for a new higher high to get it above these wicks. So they definitely could break it out. And it could be an impulse break on a daily where it breaks out, and then near the end of the day, the sellers reject it back down and we're closing back below there, and then it's like a fake out. Then it's maybe like a head and shoulder pattern. Okay, so that's why it's important to wait for bodies of candles to close. So that's why when you identify what time frame you want to trade on, you got to ask yourself, am I going to patiently wait for the full body to close? That could be if you're a 1-minute trader, if you're a 5-minute trader, a 15-minute trader, hourly, 4-hour, daily, a weekly trader. You have to have a plan prior to going into a trade. Okay, if you're taking a trade on impulse, while that candle is breaking out. Again, you have to have rules, a trading plan when a candle is breaking out impulsively, because you do not know what will happen, how high it could go, what type of reaction it could have up there, and what happens if it gets slammed down and then now you're in drawdown or it hits your stop loss. So you have to have rules in your playbook for how to handle impulse trades, and we'll do full courses and things like that explaining all of these concepts more detailed. Okay, so right now we're trading in this middle of these zones. Again, we could be consolidating, but something is very important here, because I can see a big bearish candle right here on Tuesday of this week. You can see it opened bearish ignited, and we dropped down. We made a weekly low, and look at it. It's tweezer bottom lows, almost identical to Monday, June 9's low. Okay, so it got down there, but there was a good response. The buyers were there, and they brought it right back up, and they closed it here. And then this is how we were trading Wednesday. Wednesday was a little inside day, not much volume in the markets. But what do you guys think I'm looking at right now? When I'm looking at this, what do you guys think I'm looking at? Out of all of these candles on my screen, what do you guys think? You guys tell me what I'm looking at, and let's see who knows it. Okay, this is going to be a game we're going to play. We're going to play who is awake right now. who can teach Ron right now? What are we looking at right now? Vareen, Samuel, Moshev, Brandon Akimi. What am I looking at right now? What do you guys think? Anyone on YouTube want to join in? Let's make this interactive. Come on. Moshev steps down. Yeah, we're looking at lower lows, lower highs, lower lows, lower highs, telling me we're maybe in a trend moving downwards. Absolutely. Tony, the engulfing bearish candle, this one right here on Tuesday, I'm definitely looking at that. But what specifically am I looking at on this? Come on, guys. Yeah, there you go, Tony. The middle of the big candlestick. Okay, there we go, guys. So what I'm looking for is that sweet spot right in the middle. Okay, so 50%. Rahish, my man, you got it. Okay, so I'm looking at the point of control, right? So where this body fair value gap, Wayne, you got it. Like whatever we want to call it. You know, whatever we want to call it. I call it the hamburger meat. You know, in a hamburger, you got the hamburger bun, you got the on the top and the bottom, and right in the middle is the sweet spot. That's where your meat of your hamburger is. So let's find the meat of the hamburger on this candle. Okay, the way how I do it. Now, there's two ways of doing this, okay? And let me just make this clear to everybody. Each way is correct as long as you follow it consistently, and I'm gonna elaborate a little more on that. So some traders will find 50% of the entire range of the day. Okay, so they mark up the wick, the highest point, and then they mark the wick on the bottom, the lowest point. And you can definitely find 50% of that. So if I grab my Fibonacci tool and I place it at the top of that candle and I bring it all the way down, okay? So you see what I did there. I got my Fibonacci tool from the highest point, bearish, so I'm bringing it down to the lowest point, and now I can see exactly where 50% of that entire daily range it was. It's right there, 0.5, 3,331 and 87 cents. And then I can figure out my zone, like my standard deviation above. Everything is done for you mathematically with the Fibonacci tool. There's nothing for you to do. You don't have to do any math in your head. You don't have to do anything. You just have to know that that's 50%, and then there is a zone right here. So if I go one line above and one line below that 0.5, that is considered to be a zone. I'm going to make it neutral so everyone can just learn right here. So that's a neutral zone. Do we understand what I just did there? Okay, so what that's telling me is that that right there is the middle or the point of control of the entire range of that candle. Okay, and if you do that, you're welcome to do that. But you just got to keep it consistent. So what I mean by that is if you go to the lower time frames and you start to break this daily candle down and you start going down into the 4 hour, the 1 hour, the 30 minute, the 15 minute, the 5 minute, the 1 minute, just keep it consistent by marking the highs and the lows with your Fibonacci, and so that you're not confusing yourself. Do you guys you know what I mean by that? Do you guys understand? Keep it consistent. That's one way. And this, if you do it like that, you're correct. But what you're looking for now is you're looking at something different than I'm looking at, okay? You're looking at 50% of the entire range of how high it went and how low it went, okay? The way how I do it, okay, I do it just a little bit different. I consider the wicks to be just where the market went, but there was a big reaction there. That's what represents the wick, the exhaustion, the rejection, okay? The body of the candle, in my opinion, okay, guys, remember, this is just my opinion. Everyone has their opinions, and you're welcome, and you're entitled to have your opinion, okay? Just me, what I look at for is the volume, okay? The volume that where the body, any specific time frame, to me is a point of interest, because the candle opened at that, right at that location, and it went high and then it went low, and then there's the closing of that time frame, okay? And again, it can be a daily, it can be a 4-hour, hourly, 30-minute, 15-minute, 5-minute, 1 minute. But now I see the body of the volume, okay? I can see a range, right? But the way how I do it is I consider the volume to be very, very critical, because that's where a body opened and a body closed. Okay, so the way how I do it now is I grab my Fibonacci tool, just like you do, and where I did the highest point and the lowest point, now I just do the body. So I bring it where the body opened and where the body closed. Okay, you guys see that? I just went from where the body opened and where the body closed, right? Guys, we can, this is more like of an education class, just to get things going, but we'll get into the live markets and start looking for a few scalps and things like that. But it's always good to learn. There's nothing wrong with learning, right? We have the rest of our lives to trade together, but education is important as well. So do you see now? I see a 0.5 and I see a standard deviation above and I see a standard deviation below. Same thing that we were looking at when we were looking at the entire range, but now I'm just getting more critical information on just the physical bar, okay? So I can see now 0.5, 50% of that volume was in fact at 3,345 and 79 cents. Okay, and then if I want to see my standard deviation above and my standard deviation below, again, we just make your zone, right? So now I'm seeing that this is the meat, the point of control of our volume in our candle, okay? And when we stretch this into the future, which we should be doing, is stretching it into the future. And I see how I have it as a neutral zone, okay? The reason why it's neutral is I just want you to understand how to identify a zone. I didn't say whether the zone was bullish. I didn't say whether the zone was bearish. You guys understand that? Now, where I get the confirmation to understand what this zone is I look at the candle and it did in fact close below the zone. So what I do is I still consider this to be sellers. In this part of this zone, I still consider it to be sellers in the market until the buyers prove me otherwise, okay? The sellers have the momentum. The sellers have the majority of the volume. The sellers are pushing down the market. You guys said it was lower lows, lower highs. New lower lows, a lower high. New lower low, and we've got a lower high. So that right there is a technical downtrend. So we have to give the benefit of the doubt that the sellers have momentum, okay? We can talk on a higher time frame all the way over here. Someone will say, well, Ron, gold is bullish on this. You're absolutely correct. But if I'm just looking at this move from these 2 days, 4 days, 6 days, 8 days, 10 days, 2 weeks of analysis right now, the last 2 weeks is showing me sellers are in control of gold. If we talk more than 3 weeks, 4 weeks, 2 months, 3 months out, absolutely the buyers are in control, because you can see how right here was a higher low, this was a higher low, this was a higher low. We still have not even came into this green box yet. This was a higher low, and this bearish candle has an equal bottom low right there, okay? So the buyers, if we're talking 3 weeks, 4 weeks, 2 months, 3 months, they are in charge, okay? So this could be just a minor pullback and gold could continue to take off, or sellers could push this down and take out these tweezer bottom lows and in fact start to fill this candle and revisit this green zone, okay? And then that's where probably the big buyers are waiting. They're probably not waiting to buy somewhere in here because this could still come down, and they're waiting for a nice discount in a demand zone. Does that make sense, guys, right? So now let's just go off of what we can see here, okay? So now that I have my bear zone identified, I can get rid of my Fibonacci. I again stretch it into the future in case we revisit this zone later tonight, maybe tomorrow, maybe Friday, okay? So now what we can see is how far down did we come down this week? So we can mark our weekly low right there with a purple line, whatever you like. And if you guys want to also write notes, you can just right click the line. You can add alerts to it. You can write things on it. So if I want to write something, a text on here, and I want to know that this is my weekly low, sorry, I spelled weekly wrong there, weekly low, just put it in your style, write it whatever color you want it. If I want to keep it consistent with the purple color, I can keep it consistent. If I want to place it on the top, I can place it on the top. If I want to place it in the center, I can choose where I want to place it. And you can do in the top, in the middle, or the bottom, wherever you like, okay? And then there it is. So I know that this purple line, if volume ever comes back down here on a daily, I know that that's my weekly low. So maybe there's going to be buyers there. Okay, so I can see now when we came down on this Tuesday, that made our weekly low, and then there was buyers that brought it right back up. And look at where we closed. So this is where I was considering. The most critical point of a candle is where it opens and where it closes. So right there, we can mark that up. That's where it closed, and this is where we opened yesterday on Wednesday, okay? And it's at 3,322 and 85 cents. So on a daily, you can mark it with a different color if you like, or you can just write whatever you want on it. So that I know that that's a daily point of interest. This is where a body closed and where it opened. And when this day opened, it was initially bearish. It came down, sellers were pushing it down, but it stopped right there, okay, at 3,311. So it is higher than our weekly low. So that's telling me the depth of market is getting stronger, is building for the buyers. They're bringing it up. They're protecting it from coming down. So it's holding. And then what was the results of this? They pushed it all the way right back up to the opening price, and it pushed up bullish where it made a high right there, okay? And you see it's still below 50% of that big bearish candle. So we can identify that with another yellow line because that might be a critical point of interest we will revisit throughout the week, okay? And that is at 3,336 and 98 cents, okay? And then what was the results? Sellers rejected it back down, and look at where the body closed. We closed right here, okay? And then now let's transition into today's candle. Today's candle is rather young because it just opened like 4 hours ago. So we're not going to see the full details of where today's daily candle could go because we still have 19 hours and 30 minutes before this candle closes, okay? So after this call, I'm going to go to sleep, but this candle is going to continue to trade. In London, it's going to continue to trade. I'm going to get up for pre-New York and New York session. Guess what? The daily candle might be down here. It might be up here. So then we have to base our analysis off of it. I might come trade with you guys tomorrow post New York. And guess what? This daily candle will still be moving. Okay. So right now we can see exactly what it's done so far. Okay. So let's now understand. We closed right here yesterday. We opened in the same spot. So what I do is I ask myself, was there any gaps in the market? Because daily candles can gap up and they can gap down. That's all how they open and close, whether there was some sort of volume going into the close or the open, or there was some type of news, or market makers just make their daily opens and their lows as they please, okay? So I look at that because then if there was a gap up or a gap down, I want to see if that gap was filled. If it hasn't been filled, then it might get filled at a later date. Okay, so we have to acknowledge that. You guys understand gaps in the markets. Okay, we'll do full webinars on every single concept, every single thing that I'm talking about tonight. We'll break these down into individual lectures. Okay, but I just want you guys to understand the whole scenario of everything. Okay, so there could be gaps. In this situation, there was no gap. It closed, it opened. Point of interest. Okay, so I know that this is a big level, 3,300, and let's just round it up to 33. 3333. So it's very easy to remember. Some people say it's a psychological number, 3333. Whatever it is, it's showing me that a daily candle closed and a daily candle opened at that location. Okay, and now what we do is we analyze what happened after the opening. Okay, so you guys tell me, after when this today opened, who had momentum, buyers or sellers? And I hope that everyone gets this question correctly, because if we don't, we got a lot of work to do. So today's bar, this candle right here, when it opened, very simple question, guys. This is not a trick question. Was it bullish or bearish? I'll wait for you guys to answer it. Until someone gets it, I'm not going to continue. Okay, and I have all night to be here, guys. Okay, I'm in a soundproof room now. I can't hear my kids, and they can't hear me. So we're going to be in here for all night if it takes till we get this. Okay, bullish. You got it. Vreen, absolutely. Samuel, Lukman, Conrad, you got it. Okay, because if you guys didn't get it, we would have had some issues here. Okay, so why was it bullish? Okay, so we opened, but I can see right now where the candle is, right? And when I thought this was pretty basic stuff. And then I had messages and traders were telling me, Ron, how do you know that it opened bullish? Okay, well, let's just follow it, right? Follow the volume. Follow how the candle is moving. Okay, it's not that complicated. It opened and it was bullish, bullish, bullish. This was a big blue candle that continued to push. We broke yesterday's high, Wednesday, June 25. You can see because the wick leaves evidence. It leaves a footprint behind. It's like if we're at the beach together and you walk in the sand and you guys are walking and I don't know where you are, I can follow your footprints. I know exactly where you guys are walking because I can follow your footprints. We can follow the volume by following the footprints that are left behind. And we'll get more into explaining what are footprint charts, because you can use that to complement your price action skills. And looking at just the traditional Japanese candlestick, you can complement it by adding a footprint chart and looking at specifically what's going on inside the candle. You get the kind of like a little hidden view of what's happening in there. Okay, and when we pushed up, we broke that Wednesday's high, and look at how high we came up to right there. That was our highest point today. So I mark the highest point of the day with a purple line. Okay, and you can write up there that daily high if you like. Again, how do you do it? Just click on it, go to text. You can write, this is the daily high, okay? The daily high, and again, just hit okay. So if it ever comes up there, that's our daily high. Now, let's do a little back testing. Remember this big red zone? Did we penetrate into this zone? No, because the evidence came right up to here, and the sellers were there protecting this big red zone right here. They pushed it down. It got rejected and they pushed it down. They pushed it down. They pushed it down. Guess what? They pushed it all the way down to where we opened, and they had the momentum to continue to turn that bullish candle into a bearish pin bar, what we have right now. And they pushed it down. There's our lowest point so far. So on this session, we are going to witness and see, are they going to break this low and continue to push it down? So that is our daily low right now. That's our daily high, and right there is our daily low. So again, if we need to write it, if you want to keep your charts nice and tidy, you can absolutely write on what these are. And when it came down there, the buyers were there and they pushed it right up to here. So you can see we're almost approaching back where we opened, but there is now some selling volume. Okay, they have momentum right now. Okay, this could easily flip because right now we're trading at 3,331, and by the time we get up to 3,333, it's only 20 pips away. So we could definitely, buyers could push it right back to where we open. Will they push it a little further up this wick, or will sellers continue to push it down? Okay, and one other thing before I continue, this big red zone. A good thing, a good habit to do is always try to the best of your ability to mark where 50% of that red zone is. I typically do it by just guessing, like right there. I'm guessing that that's about 50% of this red box. Like I can get my daughter down here. She just turned 9. Okay, it's a big year for her. She just went 9 years old. But if I told her, come down here and just put a line, cut this thing in half, I'm sure she could do it like that. But we can be perfect as traders. We don't have to guess. If you're trading and you got time to do a nice thorough analysis, take your time doing it. You don't need to guess. The reason why I guess is because I'm a 1-minute scalper. So sometimes I don't have the luxury of marking up every single candle because it's only 60 seconds and another candle's opening and another 60 seconds, another candle's opening. So I got in the habit of learning how to do it by just guessing where it is. And I'm telling you, just by guessing, it's pretty accurate, okay? But we don't need to guess. We can do it mathematically, figuring out exactly where it is with the use of your Fibonacci tool. Just bring it where the top to the red, and you see I was wrong. Ron was wrong. See where the exact white line is, 0.5, 3,345 and 62 cents. So I was off just by a little bit. But there, now I'm 100%, I got right in the middle, okay? If you want to go a little bit more extreme, I can find a zone, a hidden block inside this big red block. Now Ron is going to blow your mind, okay? So I told you, today was going to be a crazy session. Right there, what did I just do? I just marked the physical 50% of the 50% zone here. So when I go to a lower time frame, if my lower time frame candles are coming in here, there could be a reaction here. So I'm calling all scalpers and low time traders. This is very critical to your analysis. So make sure you understand anywhere from 3,346 and 88 cents all the way down to 3,344 and 35 cents that there is a nice block in there, okay? So you can leave it on your chart, you can stretch it into the future, you can wait for volume to come into here, and then you know it's the true point of control, okay? It doesn't get any more psychological than that zone right there, okay? Now, maybe we'll revisit this later this week and we'll see what will happen in there. But right now, we have a big, solid bearish pin bar candle pushing down. Now, what happens if they come down and they break today's low? Where could they go down to? They could come all the way down to this yellow line, then they're engulfing all of that yesterday's bullish volume, and they could start to push it down and start filling these wicks down here on the previous days. But more than likely is they're going to possibly come and transact in 50% of this big bullish candle. That might be tonight. It might be maybe London session. It might be even New York tomorrow. But we have to identify it, and then we see when the volume comes in there what the reaction is. So this was a pretty big bullish candle. Okay, it pushed all up to here, and then there was a little rejection, and it closed. It's not that bullish compared to this bearish candle. Like you can see, if I was to put, this blue candle, if I was to stack another one, another one, another one, and another one, how many of these blue body candles do you think it would take for me to stack and fill this black one over here? What would you guys say? I have in my mind how many I think it would. This blue body of a candle, how many of these do you think it would take me to stack to fill this entire black candle, to basically engulf it? How many of these? What would you guys say? One? It can't be one. This is one right here. Is it two? It can't be two. Two is right up to here. Come on, guys. 4 or 5. Tony, yeah, 4 or 5. I would say 5. I would say, look at 4. I'm going to say 5. You stack that one right there. Another one is 2. Let's say another one is 3. Another one is 4. 5. Okay? 5. So this is only 1. So percentage. This is 20%. Would you consider that like buyers are in control? No. There's 80% more sellers in the market than here. We're going to take, we need to get five of these bodies to push up. So if we look at today, we had a second body fill. Like if you mark that volume, I guarantee you it's pretty accurate. No, it can't be 6.5, Alex. Come on. I think 5. If you guys had 5, maybe we're bang on with 5, but 6.5 is a stretch. So we still have 80% selling volume above us, and we stacked another one today, and look at the response. Sellers are pushing it right back down. Okay, so sellers are in full control, and we've marked 50% of that candle, and we've also got an inner point of control block. So I'm going to say that sellers can continue to push it down, maybe fill back down to the low later on today and break, and they're going to come down. But this bullish candle, it still has 50%. Okay, it still has a point of control. I know you're messing around, Alex. I'm just playing too. Okay, so right here, look at what I do with this blue candle Wednesday. Again, grab my Fibonacci tool. I stay very consistent. I do the same stuff over and over and over. It's pretty boring routine, but it's an easy routine. 5 is spot on, Alex. It's literally 20%. Thank you, bro. I love math, okay? And math is, you can make math fun and make money with math. That's what trading is. For real traders out there, they use mathematical probabilities. It's not just guessing a candlestick, okay? We use real math to distinguish everything. That's why it's a game of percentages, and you can do really well. So again, what am I doing? I'm figuring out where 50% of this bullish day's candle was. Again, how do I do it? There's 0.5 of the volume. Again, I can find my zone a little bit above, a little bit below, right there. There's my block. Again, this is going to represent the buyers of that candle in that day. So I'm going to make this zone green to represent them and that point of control. And again, I'm going to stretch it into the future. And then I know today that if we come back down with this selling pressure and we break our own low, we're either going to have a reaction right here. I'll tell you guys the exact number, 3,328.99. I won't even round it up to that 1 penny, because this is how psychological this point is. 3,328.99. Mark it on your charts if you guys don't believe me. Okay, and then let me know if it did come down there, what the reaction was. Okay, that could be initial buyers where it could bounce right there. Now, again, where's 50% of that zone? I'm guessing right there. Okay, that's me guessing, right? I don't need to guess. Again, we can figure out exactly where it is. Right there. Oh, I was pretty accurate that time. Look, I was pretty accurate there. Okay, so that could be more of where the buyers are, but we could also find, again, that bullish zone within here, right there. That could be exactly where they're waiting. Okay, there could be a big block of pending orders of buyers waiting. They're licking their chops right now. They want to get in anywhere from 3,327.55 all the way up to 3,028. I know it's a real tight zone, but there will be a reaction there. Okay, so we can continue to mark up everything below us, above us, but we got a nice little starting for tonight. And again, with everything, just stretch them into the future as far as you want. Remember, these are daily candles. Now what I do is I move to the hourly. I jump in, I go to the 60 minutes. Now everything is the same. They're candlesticks. All candlesticks have the same characteristics. They all open, they all have a high, they have a low, and they have a close. Okay, we were just looking at the daily time frame for the first little bit. Now we're on the hourly. What do you guys see? You guys tell me. I see something. You guys tell me, what do you see? Right now, what's on my chart? What do you guys see? Let's see if we're all on the same page with everybody. Everyone on Zoom, everyone on YouTube. What do we see here? Yeah, I can do that, Alex. I don't know. I prefer using the Fibonacci tool because sometimes I use the Fib tool for all the ranges and retracements, other retracements. But if you guys just want to set your Fib tool exactly with 0.5, one standard line above and below, and just have it like that, you're absolutely correct. Yeah, you can do it. Lookman, you see a higher high and higher low. Yeah, I see it too. Okay, so if we just base off of our weekly low, when we came down, okay, it was coming down. Oops, I need my arrow. It was coming down. Okay, so we started this hourly, push down. We hit our weekly low right there. We have it marked up perfectly, and the buyers brought it up. Okay, nice, like they brought it above that high. So we got technically a higher high. And then we have a pullback, beautiful pullback right down here. And notice something. These hourly candles, what do you see on those tails? What do you see on those wicks? Shadows, whatever you guys call them. I see something right there. Who's paying attention? What do you see? Guys, this, I told you, it's going to be a little bit of an education session. But when you see these, you got to know what they are, because you might see these on the 5 minutes. Aaron, tweezer bottoms, absolutely correct. What is so important about tweezer bottoms? I know it's got a nice name, it's got a fancy name, tweezer bottoms, but what is the significance? What is the importance of a tweezer bottom low? I know some traders know what they're called, but when I ask them to define what it is, then they're scratching their head. So we all know, okay, we got the name. They're tweezer bottom lows. You can call them whatever you want. You can call them Mickey Mouse lows if you want. I don't care what you call them. Just what do they mean? Okay, Aaron, a possible reversal. Absolutely. So they give us clues in the markets, okay? Part of trading is, our job as traders is to pick up on clues, okay? And the traders that pick up on clues, they pick up on patterns that repeat themselves over and over and over. Okay, so that's a good point. That's one. Rejections, possible reversal. I need more, guys. You guys aren't hitting it. I need you guys to hit it for me. Come on. How long have we been working on this? We didn't just start this last night. Come on. No. Oh, there you go. Rahish, equal lows. Equal lows. Guys, write this down, put it on a sticky note if you have to. This is so important to understand what are equal lows. Now let's take it a little further. What's happening in the depth of market? If there was a live auction right now, forget about if it's an auction for gold. If we're having a live auction for flowers, okay, whatever it is, if the price is coming down and the price of those flowers are $5, and then it goes back up to $6 the next day, and then it comes back down exactly to $5, and those buyers want to buy those flowers at $5, it's telling us something. That $5 is a sweet spot to buy. And take it further psychologically, those buyers are not allowing the price to come down to $4.99. They're not allowing it to come down to $4.75. They're not allowing it to come down to $4.50. They want to keep the price at $5, so it keeps the depth of market, the buyers and the sellers changing the depth of market. So when we have a reversal, then sellers start to pull their sells. They might see that it's holding. So now instead of selling at $5.25, they might see that more buyers are coming in. They might start selling at $5.50 now, because it's a game of supply and demand. There's demand for those flowers now that we're selling at $5. So we can't sell again. We can now, there's more demand, so we got to sell our flower, maybe test out $6. Let's see if we can sell them at $6. Okay, so gold holds equal bottom lows. It did not create a new lower low in the market. The buyers have said, that's it. We're not allowing the price to come any further down. So now we can talk in gold. This was at what time? Wednesday at 9 a.m. Eastern. They made that low. That's an important day in the market. 9 a.m. is Wall Street's market open, from 9 to 10 a.m. And then our next candle, 10 a.m., there could be news, and then look at what happened. It came down there and it retested. It didn't even go down 1 penny below there, okay? So now that we've identified that, now I need you guys, I know it's late, but can we pay attention? Because I'm going to show you guys something. And I know some of you guys that are on top of this already have this marked on your charts. Now what we're going to do is we're going to go a little bit further and we're going to analyze inside here. Can someone tell me what they see below that yellow line? Below this yellow line, is there anything that you see worth talking about? Let me know. I have all night, guys. Is there anything that catches your eye below this yellow line? I'll even zoom in. Okay. Fair value gap. Which one? Okay, a lot of you guys are saying fair value gap. Danny, Aaron, which one? Give me a price target. Which one do you guys see? Just give me an approximate price target. Vereen, bullish fair value gap? Oh, okay, I'll do it, okay, because a lot of you guys are saying fair value gap. I just want to know if we're on the same page. Okay, so remember the yellow line is a static line. So make sure what we understand static and dynamic, what those, because I say those a lot. Make sure you understand what is static and what is dynamic. Static meaning that once we identify a line, it's static. I'm not changing the line. But it will always represent support if the market ever comes down here ever again. Like it's coming down again to that static line, and I expect a bounce there. However, if the selling pressure is strong, it could definitely break that, okay? But what I mean by static, if they break it, the line does not change. And then if the buyers bring it right back up, it comes back to that static line. If the volume is below it, it's a static point of interest, but now it's resistance. It's resistance because the sellers are pushing it down and they broke that and they created a new low in the market. And then if it ever wants to come back and retest that static location, it's now resistance, okay? So that's not what I was talking about, but I had to make that clear while we were here. Now, below this yellow line, we've got some trading that happened below here. We can see the exact time and date, exactly when everything happened. But there was some volume that was left over, okay? Left over, untapped, didn't transact. Where is it? Okay, remember, I'm using the yellow line. But now I'm zooming in. I'm getting real nosy. I want to see now more specifically where that volume hasn't been transacted. Whether it's going to be a valid fair value gap or not, that's for the future to decide. But what you and I can do is we can do our due diligence right now and identify the zone. So what I look for is now, just look at the wicks, right? Is there a wick right? This candle body came down. It was trading in this big blue candle where the sellers came into here. And then this day right there, Tuesday, June 24, they stopped midnight. Someone said it, or 11 a.m. 11 a.m. Sorry, that was noon, 12 p.m. right there. So I identify that, okay? I'm just going to do a small line just so you see what I'm identifying here. I'm just going to do it red. Okay, just to make sure everyone's on the same page. We have 73 viewers on YouTube, and we're dropping some nuggets tonight. So I know we're not live trading, but sometimes it's great to learn, okay? So hit the likes on YouTube if you're learning something new, and subscribe to the channel, please, to help the channel grow so we can find more traders that want to learn how to trade. Okay, so we found right there a support. Why? Because when it came down there, buyers brought it right back up. So there's still a body of volume down here that hasn't really been transacted. But there was a time in the market, Tuesday, June 24 at 10 a.m. when buyers were pushing it up. Remember, it leaves a footprint behind. It leaves evidence. It's just up to me and you to figure out and do the pieces of the puzzle. So if you take your time to do this, then you're setting yourself up for success. If you fail to do this, then you could set yourself up for failure. You know what I mean? So the more you analyze, the better. Okay. So right there, it came up, and just mark it. Okay. This is what I used to do when I was learning this. Okay. I can confidently say I taught myself how to do this. No one taught me this. This is all self-taught. This is staring at candlesticks 24 hours a day for half of my life, just staring at these things and learning from them. And now what I see is, do you see this pocket of volume right here? I call it a pocket of volume. You can call it whatever you want, but you see that pocket right there? I will even make it neutral. So now we're not talking about whether it was bullish or bearish. I'm just asking you to identify that pocket. Do you see how I figured that out? It wasn't that complicated. All I did was I saw that candle came down, sellers, and it stopped there. The buyers pushed it right back up. And then on the previous day, buyers were bringing it up, and the sellers stopped it right there, and they pushed it right back down. Now, when we bring that zone into more of a context, right there, you see that zone? I can specifically say right now with confidence that that zone is from 3,310 and 19 cents and it goes all the way to 3,311 and 21 cents. It is a fact that that price has not been transacted. So what we do is we stretch that into the future, okay? And a simple question is the volume above or below us? It's technically above us, okay? So that zone, you can mark it as a zone of support, of demand, of buyers, whatever you call them, okay? But just mark it. And what I do is I place an alert in that zone, okay? If you've got lines already on the chart, you can place an alert in there. I like to place an alert maybe right in 50%, okay? I like that psychological midpoint, add an alert, okay? I just right clicked it. I've created an alert there. So if the market ever comes back down into that zone, there could be a high probability that we could see a rejection there. We could see buyers maintaining that zone because they got in, and there's still some traders that are left behind that haven't been transacted, and they are technically buyers in the market. So if we break a new low, you see those tweezer bottom lows, how they protected it? If it dropped right into there, that's where technically we would have seen a critical bounce, okay? But the buyers now are showing strength because they built a higher low above that zone, okay? So is that pretty clear, guys? Right down there, okay? And you can stretch it into the future. Now, going back to what we see, you guys were telling me a higher low, a higher high, a higher low, a higher high. What else do you guys see? Do you guys see like a W, a double bottom, like another specific pattern that's really important to traders? Right over here, okay? So when we came down, one bottom, it came back up, all right here, here's our neckline, okay? And then they came back down. Traditionally, a double bottom comes back down to where it made kind of one bottom. Like if it came down there, we would see a double bottom. But right now, we see a equal higher low formed in the market above that bullish zone that the buyers still have not been transacted. And you can see that they're protecting it from coming down towards the weekly low. Gold is building a little bit of momentum going into the end of the week. Tomorrow is Thursday, and we still have Friday, okay? So on the hourly, midweek, Wednesday, like we can go back from Tuesday and Wednesday, the gold buyers are building, okay? But we still have an uphill battle because we still have not traded in this big red zone that we talked about for the majority of this call, okay? So right now, we've got this going on. A higher high, a higher low, a new higher high, okay? But that's the daily high, and we still have a lot of sellers up there. We're not, see how now the sellers are still pushing down the market right now. So the last hour, this was futures market, live Tokyo, 8 p.m. Eastern, and now we're going into 9 p.m. Eastern. In 47 seconds, it's going to be 10 p.m. So we might watch and see what happens in this green zone right now, like in the next little bit. Will it come in here, and will buyers be there to hold this zone? If we do come back up, where could they come back up to? I've already got a point of interest yellow line here. I've got another yellow line. Will they come all the way back to the daily high? Will they break it into there? Or will it just come up and sellers now are pushing it down? And will we get a double bottom there in that green zone? Or sellers are going to break it, and then guess what? We're coming down to that yellow line right there. And if we drop even further down, you see this big bullish hourly candle right here at 10 a.m. Wednesday this morning. There's a nice big candle right there. It came and engulfed those two candles. So that's a pretty large candle. Again, if I want to get real specific, I can figure out where 50% of that candle is, and also, more importantly, that zone right there, okay? And that is stretched into the future, and that's where, if it comes down, if it breaks, if the sellers break this zone today and it can't hold that yellow daily point of interest, it comes down here, buyers should be there. Why should they be there? Because it can continue with the trend. Now, trend lines, guys, okay? We say trend is your friend. use this parallel channel line if you can, and try and, to the best of your ability, you know what I mean? It's all about points of interest. So if I place it right there, I can consider that to be my upwards channel. Okay, where we came down, you know, made the weekly low. Look where the volume is more concentrated. The retest was right around there. So that's why I put the line there. I got a wick. You know, I got 3 touches there. And then as it's coming back up, when it came right back down, so I kind of put the top of the channel right at those bullish and bearish candles at that wick. And then I can see sellers push it right back down. And look at what happened. We've got the parallel channel, upper resistance, okay? Upper support, ascending motion, going up. So right there, that's what made our higher low, and we continue to push up, pull back into that green zone. We continue to new higher high, but notice we're not getting back up to the top of the parallel channel. If we do get up there, we're now getting into that 50% pocket. So there's a high probability that the buyers will get rejected there. And it kind of confirms our bias with the parallel channel. Now, look at what's happening. So you know how I guessed if we come down there in that bullish zone, that 50%, what I just did, does it kind of confirm like our analysis with our parallel channel? Yes, it does right there. But if they break the channel, like, you know, if they invalidate it, then that's maybe where the buyers are waiting right there to continue to keep it going up, okay? If it gets tested down there, we'll test there. What do I do down there? Since it's such a specific location, I place an alert in there. So if it gets down there, you know, I might be just doing my thing. I might be sleeping. I don't know. Or tomorrow I get an alert in there. But it doesn't hurt to just place an alert. When you use TradingView and you get an alert, I get them sent to me through email. I can get a text notification, SMS. I can be at my trade station right here. If I'm doing other thing, if I'm watching TV, I can still get an alert. And that's what I mean by patiently waiting for the market coming to you. If you get in the habit of doing this, you're going to find quite a few points of interest throughout the day. And then the only thing that's moving and variable is the volume. At some point, it may come in here, whether it's in the next hour, maybe it's tomorrow, maybe it's next Monday, maybe it's 2 weeks from now. At least we're prepared when it gets in there. I always want to be prepared to make money. If I'm prepared, then I know how to manage my risk when it comes in here. And if there's a trend developing, I want to continue to trade with the trend. If the buyers are trending and they're there, I want to be in a buying position where the majority of the buyers are waiting patiently to get into the market. That's what we call smart traders. Okay, you and I, we're smart traders. The traders that are very impatient, not marking up their zones, not marking up points of control, not trading with the trend, have no risk management plan, they're probably the traders that are losing money in these markets. And so, you know, I was that person. So were you at some point. But you gotta learn from it, okay? That's how we get better and better at doing what we do, okay? Now, let's now even take it further, okay? So in the last 2 hours, we've got a lot of selling pressure. And when did it start? It started when the futures market opened up, 8 p.m. If you guys get in a habit of trading this session, I'll trade more of these sessions with you guys. What we'll do is we'll kind of start at 7 p.m. We'll do our analysis, and then we'll watch how the futures market opens. All we got to see is maybe 8 and 9 p.m. You know, maybe we'll find a trade in there. So we'll do more sessions starting at 7. We'll go 8:30, 9, and maybe we'll find a trade in there, okay? But what we could also do is analyze the previous day's market. We can prepare ourselves for London session. We can prepare ourselves for the following New York session, okay? So we can together, we can do our charts, we can mark up our zones. If you guys have questions, we can work together, okay? It's pretty good, guys, because this is exactly how I mark up my charts, what I trade every single day. So we see now, this candle that just opened, okay, our 10 p.m. candle came down. Now notice the wicks, okay? So just physically looking at those wicks, okay? When I'm looking at the hourly candles now, I use a white line. So I color code my tape. It's called tape reading. I color code it because if I just used one solid color, I wouldn't know what time frame it is. Do you guys know what I mean? So anytime I see a yellow line, I know that that's a daily point of interest. I know that it's coming from the daily. I analyze that from a physical daily wick or a daily open close body, okay? And then when I see like a white line, what I'm going to place on my chart, it represents an hourly time frame, okay? It might represent an hourly low or an hourly point of interest where a candle opened and closed. So if I just place kind of a white line at that candle right there, now I know that that's an hourly low. I can also write on it 2100, what time it was. That's 9 p.m. Eastern's low. And then I can see when we just opened right now, 10 p.m., we broke our daily low. We came down. And look, did it break for a new lower low? Okay, just technically speaking. If you zoom in, it came right down to there. 3,329 and 21 cents. That previous low was 3,329 and 15 cents. Okay, so it's just 6 cents difference, 5 cents, but we talk psychology here. So you see how it's a higher low. So now we're coming right back up. With buying volume, they're coming all the way right back up where this hourly candle just opened at that point of interest from the previous one. And look at how bullish it is now. So our candle's coming up. Look at where we just got a wick. Look at where they just rejected it, guys. We just spent about 1 hour doing our analysis. It just got rejected at that yellow line. If you rewind this video, you're going to know exactly why I placed the yellow line specifically at 3,332 and 53 cents, pretty much on the dot. And does it surprise me that sellers are rejecting it right there? It doesn't. Okay, so now you can see how points of interest are play. You can see it right there. So it got rejected. Where? Around 50% of that hourly candle. Had you guys been quicker than me and you guys figured that out, you guys probably could have been in a buy and you would have known to maybe take some partial profit out of the market, because when you're buying into sellers, and to close your position, you got to close where the sellers are. Buy low, sell high. If you sold in there, you could have made some good profit, okay? And the majority of it in this candle so far. But this candle has 51 minutes to go. It's an hourly candle. It could definitely continue come up there and break even higher. Sellers could push it down and start exhausting these buyers, okay? So now we've got a bullish response after the last 2 hours coming in the market, okay? So now what we can do is go on to the 5 minutes. And now we're looking at physical 5-minute bodies. Just like the daily had small candles, had large candles you could have based analysis off of. Same when we looked at the hourly. Hourly had small candles, indecision candles, spin tops, bullish engulfing, bearish engulfing, abnormally large candles. Even the 5-minute candles, they've got little candles right here where it was kind of consolidating. And then this looks like a rather large bearish 5-minute candle. We can do the same type of analysis with this body as well. You can mark where it opened, where it closed. You can get the physical 50%. And if you stretched it into the future, you can see what the 5-minute trend is doing right now. So we're in a 5-minute downtrend currently. It pushed down, lower low, came back up, lower high, a new lower low, came back up, lower high, and we're pushing down, but we got our kind of our tweezer bottom, not technically tweezer bottom lows, but really, really close. So it's a clue that the market is coming up. But look at now. Remember that yellow line. Now you see how that daily line is playing right now. Okay, there was a rejection there. A 5-minute candle impulsively broke above there, but look how it got rejected and it closed right there. The next candle impulsively broke above there, made a new high, but quickly got rejected and closed all the way down there. This candle, as I'm speaking, as it just closed, came up bullish and just got rejected again at that yellow line. Okay, remember, we didn't guess where that yellow line was. We placed it there for a technical reason, and you can see how it's acting as resistance. If I want to draw a 5-minute zone right now, I can use that yellow line, and what I can physically do is just look at some bodies of volume, how they were trading specifically in that zone. And now I can now find my 5-minute kind of selling zone. Okay, so Now, if the buyers can continue to bring it up there and push it and actually close with blue volume, bullish volume above there, then I might technically invert this zone and make it green. And maybe it hangs out here. Maybe it flags up here. Maybe it has enough volume to fill that wick and take out the high, and guess where we're traveling? Right back to fill that wick into here and maybe up to here where the next sellers are in the market. But we can look for a nice little scalp buy up there. You can measure the move exactly so you know how much we're scalping for. You get your trusty ruler and you measure to fill that wick. And right now in today's session, trading at 10 p.m. Eastern, okay, the volume is different. It's much different than trading COMEX. It's much different than trading Wall Street, okay? But this is how the volume is moving. If it just technically fills that wick, a wick fill, we're looking at 9 pips, okay? And then if it continues to move and fill that second wick and maybe properly fill that wick and then get up to there, and we're trading into maybe 50% or that base of that candle where that's got that zone, that could be about 20 to 23 pips. Not bad scalp. But if it continues to drive and fill and fill and fill, we get back up to there. We're looking at a 30, 35 pip trade. If it can get all the way back to that daily point of interest, we're looking at a 40 pip scalp, okay? But as we're moving up there, you got to understand that there's resistance right there. It could just come up there and get pushed back down. It might even come back all the way down to retest this zone. If we close above, it's demand. You know what I mean? So, but when we're above there, we can consider buys. But we still we can't be ignorant to the fact that knowing that we're still in a downtrend. Okay? So you can kind of draw yourself a channel, if you like, for what's going on in the market right now. Okay? So let me just get rid of this. We're still below here, so it's a red zone. And then what we do, we have this channel coming down as of 10 p.m. Okay, so it's as of 8 p.m. when the futures market opened up. So gold has been selling since the futures market opened up. How do we identify that? Lower highs, lower lows. Now we can draw ourselves a channel coming down. Right now it's black. If you want to change it to show you it's a red channel, change the color of it. It's a red channel. So now I can see we came in there, we came back down, we came back up, right to the channel, back down, came down here. It started to come in here, but impulsively, no blue volume close above there. So sellers are still trying to, but notice that it is gaining a little bit of strength. Again, the sellers pushed it down, buyers brought it right back up, closed it with some blue volume. Sellers again pushed it down. I got a higher low, I have the hourly low right there, almost like tweezer bottom lows, but we gotta attempt to break this red box, okay? So let's watch this for a little bit and see, what do you guys think? Do you guys think that buyers can break above this, or you guys think sellers are still gonna reject this point? What we can also do is add some indicators if you like. I personally don't use too much indicators, but RSI indicator, what it's telling me right now on the 5 minutes is we're below 50. So RSI, you guys know, oscillates between 0 and 100, okay, with 30 and 70 being the standard zones to illustrate where it's overbought and oversold. But it can give a lot of false signals if you just watch this, follow this. But we're still below the 50, so it's still below there, still considered sell zone, unless the strength will flip if they can break it above 50 and keep it above 50. You can see right here, they tried, like the strength, it got strong, but then that's where that big bearish engulfing candle rejected that strength. And you see how it pushed down even further. Okay, so we're getting to that point again, and we still have this block in the market. Okay, so RSI is telling us we're at that psychological midpoint. We also are at a block in the market. This candle is closing right now in 5 seconds. So let's watch exactly. Let's get nosy. Let's get in here and watch how it closed. Okay, so you see where it closed? Is there still some volume left in that candle? I use this, my cut line. Okay, so I cut it. Just like OT Genesis and Young Dolph, cut it. Your price is getting too high, we need to cut it right there. So I cut it. So what I'm looking for is, if the sellers push it down, I expect some buyers to be right there, that point of control, 50% of that body volume. I just guessed. I could have figured out a little bullish zone in there. Why don't we do it to see if we ever do revisit that zone, and then we can see what happens, okay? So where it opened, where it closed, let me just grab my fib, okay? Where it opened, where it closed, right there. Okay, you see how close I was with my cut line? I was pretty accurate, but not 100%, okay? All traders make mistakes, okay? Let's leave our ego at the door. We all make mistakes, okay? And then there's my 5-minute bullish zone right there of that previous candle, okay? So how low did this candle come down to? Right there. Did we come into it? Technically, no. Okay, that's the low right there. But the buyers did something. They brought it all the way, they filled that wick, and they pushed above that previous high wick, and look at where it traded, right into 50%, right near that yellow line. Remember what I told you, that was a very important line. And look at what they did. They rejected it. Look at there, okay, guys? You're watching live now, okay? You guys want to go down to 1-minute candles, 5-minute candles, things get fast. Now you see, did they cut in our little zone right there? And look at where it caught a wick, right at the bottom of our zone. And what was the reaction? Buyers were waiting in that body of that volume of that candle to buy. They bought the low, they bought the perfect area. Those were pending orders waiting, and they got activated. And look at our bullish response coming out of here. This candle is closing in 3 more minutes. Okay, that's what I'm saying. You guys can nail these scalps with precision. You guys can nail your swing trades with accuracy and precision. You guys can nail intraday trades with precision. Okay, so it's now we're in a 4-body uptrend, about 20 minutes now, where it made a higher low, higher high, higher low, higher high, higher low, a new higher high, and you see that evidence. I'm telling you guys how accurate these things can be. Okay. Good night, Vereen. Guys, are you guys surprised? We're breaking through that red block with this nice big bullish candle. Okay, so it is impulsively breaking out of here again, and we're testing the top of this bearish channel. We had an impulse candle right here that broke out and got rejected. We had a next candle that broke out impulsively that created that new high that got rejected hard. So we're coming again, but we got a strong pocket of buyers. Okay, guys, if this is helping, let me know. Leave a like in the channel and let us know. Okay, now what we got to do is watch for this candle to physically close. That zone now, we can stretch it into the future, okay? And now we're physically going to watch and see if a body closes above here. And if it does, I'm just going to go through my motions of flipping this red box to green. If that body of volume closes above there, this might represent a new area of static support or demand, okay? We're going to go for about 30 more minutes, guys. Or like right to 11 will be like 40 minutes. But let's see. Maybe we'll see something. But I hope you guys are learning something. I hope that one of you guys has learned something from tonight. Okay, so it's getting... Do you guys remember what this dotted black line is? Does anyone remember? Okay, that's why it's important when you're doing your charting, you know what these things represent. Because if you don't, you're going to be confused. Okay, this dotted line was, remember, from my uptrend from a higher time frame. That's the 50% of it. Okay, that's what the dotted line represents in a channel. You can see right here. Here's my bottom of that higher time frame channel, this solid black line. There's the upper channel, and we're right at the midpoint. We're at the psychological midpoint, and we're at the the parallel resistance of this short-term trend. Now, look what happened. Did we close above? Yes. Go red box green. Okay. Just get in the habit of doing this. Okay. Red box green. It's already kind of marked a nice fair value zone for us. So if the market comes back down, we are physically retesting this zone. Look how it's coming down. Okay. So will it come all the way right, yep, where my cursor is. Will it catch a wick right there? Or we're going to come deep into this. So right there, we just hit that yellow cycle, that yellow daily point of interest. Okay, we just tapped into it. And it's 50% of that green box now. Okay, so we're going to see if we're holding. A lot of selling pressure is coming down. Okay, good wick right there, guys. This candle could flip and turn bullish and continue to drive up. So maybe I might look for a scalp buy coming out of here. So I'm just waiting for this candle. It's coming back down bearish. Okay, I'm looking at my spreads on my gold right now. Seeing how everything is moving. I might potentially look for a potential buy, or I'm going to wait for a deeper opportunity here, but I think it's ready to go. Okay, it already retested that. It's pretty good. It's a bullish pin bar. And as soon as maybe it continues to drive up, I could be looking. So one more time it came up there. They rejected it back down. Let's see if our buyers are still there to continue to push it up. There's a lot of time left on this candle. 3.5 minutes to go, and there it is. Okay, so I'm going to go into a buy right now. I'm going to try and scalp this candle. I'm going to go into a buy. It's buying a bullish pin bar. Okay, so I'm in a buy right now, and I'm just kind of looking to see maybe if we can fill that wick and get to maybe those bodies right up there. So I'm looking for, I can measure it exactly what I'm looking for. I'm looking for possible 25 pip scalp up there. Where am I going to place my stop loss? I'm going to place my stop loss right below these lows. Okay, so I'm placing it to get protection from our higher time frame, this green box that I flipped it right now. If it has to come back down in here, we witnessed good buyers there, so that could be like a double bottom right there. So if I go into drawdown, I'm still protected by this box here, and then I kind of just put my stop loss just below this low and this low. It's quite a bit of a stop loss. Okay, so then I would hold the trade to maybe fill up to that daily point of interest up there. However, if I can get up 15-20 pips without encountering drawdown, then I'm just going to start to reduce my risk, start bringing it up to there, and eventually into there, and then hopefully get it to a break even if I can in this. Okay, so I'm in a buy right now, and I'm just looking for continuation to the upside. We got good bottom already pronounced. We have a bullish candle that did close after we got rejected with those. We had a solid retest, and I bought this candle, and it's already in profit, but not exactly what we're looking for. But sometimes when you get in the habit of this, when you're trading like this in New York, sometimes like I trade US 30 more than often, and a fill like this could be 10-15 pips, perfect for a scalper. Okay, I'm not looking for 50 pips, I'm not looking for 100 pips. Again, this is scalping. It's a different market. That right there is 10 pip scalp with 0 drawdown. If that's what you're looking for, sometimes that's all I'm looking for. I look for 10 of those trades a day. It's 100 pips, okay? But you got to learn how to boom, 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 in, out, you know? But if you're holding a trade to develop, we got to watch how high it went, how it got rejected, where the volume closed, how the next body opens. Can we judge where 50% of that volume is to continue to move with that volume? All of these things to consider, okay? Do you guys understand how I got in that trade, why I got in that trade? I also looked at the size of that wick right there. It's a rather short wick. That's why we got that pop and that nice little fill for 10 pips, okay? Some of you guys, if you're quick, when it goes up 10 pips, you can automatically be at a break even. You know, you don't even have to encounter any drawdown. Now we got 30 seconds to go into the close. I always say over and over and over, the last 30 seconds of the candle are the most important time. It will show who has momentum going into close and who can take over momentum going into the next body open. Okay, so let's see if we can drive with some bullish momentum going into our close. Can we attempt to tap into the highest point of our candle, maybe make a new high going into the close, or are sellers going to come in and reject this right at the end? Okay, so they're coming in, they're pushing it down right now. Okay, are we going to retain any bullish volume to move into our next bar? Okay, there's the close. Okay, we didn't close right at the high, okay, but we still have some good volume. Again, I can cut what we have right there just in case we got a pullback. We want to test maybe 50% or point of interest where we opened, or the green box below us, okay? We have an ignited bullish open, okay? So that's what I always ask you guys, to identify what the open of the candle is. It opened ignited bullish, buyers are asking to trade as soon as it opened. So it had that push that just took us for that new high, created that higher high, but then remember, we're buying against resistance. So we filled a little bit, but we have not filled that entire wick. So technically we have a lower high still from over here, and it's still in the market, that lower high. They're pushing it down. The sellers are right there, pushing it down, coming back. So we just lost our ignited bullish open, okay? See how it created that little wick on that candle? That was us losing our bullish ignited open. But buyers are coming in strong right now. That was the first 1 minute of this 5-minute candle. We should be up 15 pips right now. Okay, there's 15 pips. Okay, so I could technically go to a break even now without even encountering any drawdown. Go to a break even now, you're up 15 pips. I'm going to a break even. Worst case scenario is it comes back and hits me out at break even. Okay, I'm willing to accept that. But if this thing starts going 20 pips or more, I'm verbally telling you guys I'm going to take out 80% of my trade and leave the remaining 20% at break even. Okay, so remember what I said. If it gets up to 20 pips, which is right there, that's 20 pips. If it gets right to there, I'm going to take out 80% of my trade. Okay? And that's a 2-bar scalp if it gets up there. Okay? Come on, just a little further and order will be filled. Worst case scenario, taking emotions out of the trade to break even. I'm good with break evens all day, every day. I didn't win any money, I didn't lose any money, but we'll get in the habit of taking money. I just grabbed 80% out of there, okay? 80% of 20 pips, okay? Standard lot, that's 160 bucks right there. Worthwhile, my entire session. I just made enough to pay for those soundproof acoustic boards that you see behind me, okay? They were more than 200 bucks. They weren't cheap, but one of those, another one can pay for each one of those boards. But guys, okay, that was a 20 pip scalp, 80% taken out. I got 20% running with a break even. If you guys understood this assignment, hit the likes on YouTube, put an emoji, let me know. Guys in Zoom, did you guys understand that? You understand my psychology behind that whole trade? Sorry it took forever to walk into this trade because we spent an hour doing top down, but everything I explained on the daily, everything I explained on the hourly, everything I explained on the 5 minutes got me into that trade, okay? And it's running right now. Runners, let them run. Hopefully it's got shaved its legs and it's got some nice sexy legs with some high heels, and these legs want to continue to move because I'll continue to get runners, okay? But originally I placed a stop loss, but it was an unrealized stop loss. Nothing even was in drawdown. So I really like trades like that. Whenever I can get into a trade and have minimal to zero drawdown, I'm loving life, okay? Worst case scenario is at break even. All good. We'll find another trade. We didn't win, we didn't lose. But while we're winning, get in the habit of taking some money out, okay? Believe me, you can start to compound your account by not getting too greedy because we're still counter buying against all of this bearish pressure, right? But we're breaking out. You know what was the clue? Right there. That was the clue. We broke our daily low, that purple line that I wrote there, very specifically on today's call. We broke it. They grabbed the liquidity, and that's the reaction after they grabbed the weekly low liquidity. Guys, it doesn't get any easier than that, okay? Keep trading simple. You know, we spent how long? An hour and a half on this call so far, but an hour and a half to make 25, possibly 30, yeah, almost 30 pips up here. Maybe it will run to the full target up there to that yellow point of interest, but we might have a pullback. But I can definitely figure out where 50% of this big body candle's volume is in case we pull back. Very easy. Go through the same thing over and over and over. I'll help you guys. Here's the close of the candle right now. I could exactly figure out where my cut line is. Cut it. When price is getting too high, you need to cut it, okay? If you got to listen to that song in the background, listen to it. OT Genesis, Young Dolph. They'll tell you, when price is getting too high, you need to cut it, okay? First pullback could be 50%. However, we could have a higher low without even touching this red line, okay? But if it breaks this red line, then our big body point of interest is where this 5-minute candle closed and where this one opened, okay? So now we're gonna test our theory. Okay, that is just a line, just a point of interest. If I make a zone, which we did on our previous bullish candle right there, that got me into that trade, I can do the same thing with this body. It's a rather large body. Again, it opened and closed. Was I accurate with my 50%? No, Ron needs to smoke a joint. And then I get, the more joints I smoke, the more accurate I get with my zones. I'm a trained smoker, okay? So I've been doing it for years. I don't suggest, if you just started, don't get into it. Smoking weed, not cigarettes, okay? And you're going to see me here soon. As soon as I get that glass door put on the other side here, I put a vent, high performance vent above me. It's really quiet, and it will suck all the smoke and go right outside of my house. So the wife and kids won't even know what's going on in this room, okay? So let's keep that secret between us, okay? Don't rat me out. If there's any rats in the group, you guys are going to get kicked out. I'm sorry. We don't like tattletellers here, because then Ron will get grounded and you're not going to see me here anymore, okay? So let's keep that between us, okay? Look at what's happening now. Did we pull back into our zone? No, I can now see a fair value zone, fair value gap, Mickey Mouse zone. There's a wick and a wick, untapped. Just raise your green box right there and right there. If we ever revisit this, that could be a pullback buy in there, okay? Make trading easy. Look at this, full TP. We just filled to our yellow point of interest, okay? Now we're driving into 50% of this big bearish candle that started this entire trend down when the futures market opened up at 8 p.m. This is a big candle, okay? And we just drove right into it. Don't get greedy here, guys. Please take some profit out of here, because this could come tumbling right back down, okay? Try getting in the habit of, I'm going to take out 10% of my remaining 20%. I'm taking it out. And I'm only going to leave 10% running for the rest of the night. If I wake up tomorrow morning and gold is gone, God bless. But for now, I want my 90% out and I'm happy. So guys, that trade started right there, 0 drawdown, and got us to our daily point of interest for a total of 35 pips. The rest is up to you, whatever you guys want to do with it, okay? Guys, I think that was fantastic. So I'm not going to look for any other trades. Do you guys have any questions now? Because I'm going to be here for about 10 more minutes, 15 more minutes. You know, that's what we did. We started a live education. We turned it into a live setup and worked out rather fantastic. Any questions on this, guys, in Zoom? If you want to unmute your mics and talk to me, if you got a question, you know, I'm all ears here for you guys. Okay. So let's just clean up, tidy up this chart, because it's getting ugly here, okay? So remember my first cut zone, okay? We didn't even come down here. This cut zone, that's a fair value gap, guys. You want to pull back buy, you want to wait patiently, do this. Add an alert right there at that red line. And look, when the market comes back down, if it comes right down there, pending buyers are probably accumulating right there to take it back up to maybe test the high of the day, if it does eventually pull back in there, okay? Any questions, guys? How do you guys like the setup so far in the background? Guys, I got where Kobe Bryant is up there. There's going to be a Samsung Flip 58-inch screen where I can touch it and do live webinars with you guys, or recorded webinars. But I can show you guys all of that with the touch of a screen and things like that. So pretty cool, guys. I've been working hard on this room. I apologize, guys. It's taking longer than expected, but it's not easy to frame walls, add the all the soundproof insulation, put the drywall, mud it up, paint it, add these soundproof walls, do all the electrical. I have a drop ceiling. If you guys can't see it, look at the work on that drop ceiling with an LED light on the top, and that vent took a couple days for the smoke. So and it's not done yet. but guys, if you guys need any renovations to your house, let me know. I enjoy this. It's my passion, trading and doing a few things around the house. I love it. So I'm learning, because I want to start to build houses in the near future, and so I'm slowly learning. But trading, I've learned a lot about this. Renovations, I'm learning. But look at what we got. An ignited bullish candle. Where did it open, guys? Like, rewind this video. Like, rewind it. Look at where we closed. Right at that daily point of interest. Remember earlier on the call, I talked about 3,336 and 99 cents. I said it was going to play in the near future. Look at where this 10:30 candle, I always talk about the 30-minute candles, where it closed and where this one opened. It opened bullish ignited at that daily point of control, and we're still filling wicks and driving for new highs. So that's a 45, maybe a 50 pip pig we just caught. Holy, that could be a 50 pip pig. Try and say that 10 times fast. But guys, it doesn't get better than that. It's unfortunate that there was only 90 people on YouTube. I know it wasn't even a scheduled session. Guys on Zoom, I hope you guys had fun, but this is what we're going to do more often. We're going to do a lot of fun sessions, guys. We can turn it into education. We can turn it live trading. I can answer all of your questions. Dave is killing it in the New York sessions with the team. So we're going to cover a lot of sessions. I'll feel confident in this room, you know, when it's soundproof, and I can come in London's, I can come in pre-New York's, New York's, post-New York's, Tokyo sessions, all over the clock, guys. Hopefully you guys had some fun. I did. Anytime you can come in and grab 50 pips, just like that with no drawdown. Guys, that's why I'm telling you, don't sleep on Tokyo sessions. They're fun, especially with gold. With all of the news around the world, you know, just trade with proper risk management. Don't do anything silly. And guys, a well-prepared trader, it's all about preparation. It's all about the analysis. Take your time. Don't rush it. You know, do a thorough top-down analysis and just trade. Let the volume come to you. Sometimes you're going to make mistakes. You know, I could have got in that trade right there, and it could have rejected and came back down. But I told you guys where I strategically placed my stop loss. Had it got stopped out, okay, that's the nature of the game. You're going to get stopped out sometimes on trades, and you're also going to make some profitable trades. But anytime I take a loss, I go back and I learn from it. I learn. It's a paid lesson. If I get stopped out and I lose $200, that's a $200 lesson for me to go back and learn. What did I do wrong there? So all of it will have learning. Guys, holy shit. We got a beauty. Break of trend, break of a weekly low, almost tweezer bottom equal lows, clue that the market was changing. We had confirmation of the bullish candlestick that closed above those zones prior to those impulse moves. Sorry to those buyers that impulsively broke there and maybe got stopped out. We were the patient ones that waited for the candle to close, and we caught a retest and a break and a pop and a firecracker going up for 50 pips. And guys, amazing. I had a great session. Join Dave tomorrow, 8 a.m. for live New York. I'm coming in post. It'll be around 11:30 because I got to take my son to the dentist at 9:40. I don't know what time I'll be back. And it's the last day of school. So guys, we might get back to doing some power hour sessions. You know, the midday wrap-ups. Those might be coming too. Those are some fun sessions too. Because wild last hour of trading in the stock markets is fun. So I'm super excited, guys. Thank you for being patient with me. I'm still, you know, tying up this room and doing a few things. I'll show you guys some before and after pics, and you guys let me know on how my renovation skills are. But guys, congrats. Have a good night, everybody. I hope you guys enjoyed this session. I had a blast. Hit the likes, subscribe to the channel. Guys, I'll see you guys tomorrow. Samuel, have an amazing day and night. Aaron, thanks for joining, guys. Guys, thanks for putting up with me and answering, you know, those questions. I know that you guys are learning. It's awesome, guys. And guys, we got some news behind us. So anytime you see like a nice move in the market, you can go back and back test and see, was there any news that was dropped? Was anything said? What caused this? Anything, you know, anytime there's a market move, there's always going to be a reaction. Okay. So if this gets and fills to our purple line, we're filling our daily candle. So what you could do is now get off the 5 minutes and go to your daily candle and start to analyze what we just bought. Okay, this is us. We are part of this daily candle that's filling up right now. So look at, are we going to come all the way. So if you recap what happened, we opened, it came down. That's where we bought, guys, when it broke the daily low, kind of right there. You know, it came back up to the opening position and driving. It filled yesterday's high. We're filling right back to our daily high. Will it break even further? This thing could build later tonight. You could have a runner going right up to here, to the next yellow line, 3,345. I'm calling it out right now if it gets up there, okay? But that's us, part of this volume, testing the daily high and could possibly break. But we also have to recognize that sellers could be there, absorb us, and push it right back down. That's why I closed out 90% of my trade. I got 10% running, because if it pulls back and goes down, I don't want to lose that daily wage right there, okay? So remember, it was just a scalp, but it turned into this move right here. Holy, it's like a Picasso. Just beautiful, guys. Okay, so glad we caught something. I'm happy that the markets were trading real nice. You know, sometimes we're going to get into some choppy sessions and we're going to be watching paint dry here, but it's a good time to learn, ask questions, educate. Who knows, maybe we'll walk into a nice setup. In my opinion, that was a pretty good setup. Why? Because we allowed this trend to come down, lower lows, lower highs, lower highs, lower lows, and then it broke the daily low, and we had nice rejections, body volume held, and then we allowed it to come up. But this candle right here, guys, at 22.15, when it closed above, that gave us confirmation that buyers were serious, that they closed it above. They weren't just doing these impulse moves and failed. They closed, and it also retested our position. Remember, this was a red box. As soon as that candle closed above, I said, guys, go through the motions, flip your box to green, and maybe some of you guys bought that wick. Maybe some of you guys were waiting in there with a sniper entry. That's what a sniper entry is. When you target a wick of a candle, we call those headshots. That's a headshot in trading. You kill that candle. Like, you basically unalive that candle right there with a headshot. That's what a snipe is. But some traders can do that, okay? And some scalpers can do that with pretty good accuracy as well. But just waiting patiently for those setups. Guys, we're going to probably tap into that high of the day. That could be approximately 60, 65 pips up there. So congrats, guys. I had a great session. Alex, have a good night. We'll see you guys tomorrow. Guys, we just did simple. We got into top-down analysis. We stayed with one chart today. We watched gold. We caught ourselves a trade, and life is good, guys. So stay blessed. We'll see you guys tomorrow. Show Dave some love tomorrow morning. He's killing it as well. And, well, guys, I'll be back post-New York on YouTube and Zoom. Have a good Thursday, guys, and get some rest, and we'll see you guys tomorrow. Thanks so much. I appreciate all of you guys. Have a good night.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.